Okay, so now we are doing required number 2, which was to compile a statement of comprehensive income according to the absorption costing and the variable costing. So we've done the variable, now we're moving on to absorption costing. So this is how your framework looks like in your absorption statement. We have sales, cost of sales, your opening inventory, your production, and your closing inventory, your gross profit, your other expenses, and then finally, what we're trying to calculate, your net profit. Okay, so I'm going to start with the sales. So they told us that in 2017, Jabu increase the sales to 70 Rand per unit. Therefore, the 70 Rand times 11,800, which is the units that we sold in 2017, would then give you a total of 826,000. Right, so now we need to also calculate our cost of sales. So our cost of sales is kind of like a build-up. So we're going to start with our opening inventory, and we have our variable cost portion and our fixed cost portion. So for our variable cost portion of our opening inventory, we're taking the 30 Rand times 1,800. Now, why am I taking my 30 Rand variable cost and not my 31 Rand? So the 1,800 units, right, were from the previous year, which was 2016, right there, because remember, closing of the previous year becomes opening of the next year. So it was for 2016 when the variable cost was still 30 Rand, because the effect of the 5% increase only came in 2017. Right, so it's the 30 Rand times the 1,800 units, which would then give you a total of 54,000. Now, with the variable cost portion, it's also the same method. It's the 9 Rand 60 times the 1,800 units, which will then give you a total of 17,280. Okay. So what I'd like to do is to add up these two amounts to get a total for my opening inventory, which was 71,280. Then we move on to our production. Now, bear in mind, production, this is when the 5% increase came into effect in the year 2017. So now we're using these variables. So it will be the 31 Rand 50 cents times the 11,500, which was the planned production units in the year 2017. Then that will give you a variable cost of 362,250. With the variable cost portion, works the same way. We take the 10 Rand 8 cents times that with the planned production units of 11,500, which will then give you a total variable fixed cost portion of 115,920. So my production then ends up to 478,170. Okay, then we move on to our closing, still same principle, just different inventory units. We have the 31 Rand 50 cents times it with the 1,500, which was my closing units, to give you a negative 47,250. Remember, it's closing, therefore it needs to be minused. Fixed portion, it's also 10 Rand 8 cents times the 1,500 units, which would then give you minus 15,120 to give you a total closing of minus 62,370. Right. Before we can calculate our cost of sales, we also need to take into account our over or under applied. Right. So they told us there in the information block, the first one, that the actual fixed manufacturing cost was 105,000 Rand in 2016 and 110,000 Rand in 2017, right? So we're dealing with 2017. So to get whether your manufacturing overhead were over or under applied, you need to take your actual minus your applied. So we have 110,000 Rand minus the 115,000 Rand 920, which is my fixed portion of my production, which would then, the difference between the two will then give you a minus 5,920, which you then can tell that we over applied. So to then get my cost of sales, I would then have to take my production plus my opening minus my closing minus the over applied manufacturing overheads, right? Which would then give me a total of 481,160. Please take note that it's in red, therefore that means it is going to be minused. Okay, so my sales minus my cost of sales would then give me my gross profit. So my gross profit is 344,840. But remember, we need to take into effect the other expenses that we incurred. So commission, they told us that he increased the sales commission to 6%. Therefore, it is 6% of the sales that we made in that year. So 6% of 826,000 would then give me 49,560. It's also in red because it will be minused. Okay, now coming to my admin costs, right? They told me that variable admin costs vary according to the number of units sold, right? So if you look in the information that we were given for our absorption cost statement, you can see there in the year 2015 that our variable admin cost was 63,000 rands. So 63,000 rands divided by the number of units in 2015 that we sold, which was 10,500 according to our absorption costing statement, you would then get it is 6 rand per unit. Right, but remember in 2017, we had a 5% increase, therefore 6 rand times the 105% should give you 6 rand 30 cents. Okay, so that's how we got the 6 rand 30 cents, times that by 11,800, which is the units that we sold, because they told us that it varies according to the number of units that we sold. That will then give me an admin cost of 74,340. Okay, and then our fixed marketing as given is 50,000 and our fixed admin as given is 70,000. Okay, so then I also like to total this. So my total of my other expenses would then be 243,900. This is the amount that I'm going to minus from my gross profit to give me a net profit of 100,940. Okay, so this is my absorption statement in full. Then we move on to question 3, where they want us to reconcile the profits. So they want us to do the reconciliation of both the absorption costing method and the variable costing method. So this is how you do your reconciliation. You'll have your absorption profit there, which we calculated was 100,940. Then add your opening fixed cost, which was 17,280. Okay, where did I get it? There it is. So it is my fixed cost of my opening inventory, right? Then less your closing fixed cost, which is 15,120. Where do I get that? There it is under my closing inventory, the fixed cost portion, 15,120. So when you take your absorption profit and you add your opening fixed cost and you minus the closing fixed cost, it should give you the variable profit. This is my variable costing method in the statement of comprehensive income, and that is my net profit. So this is the amount that we want. So let's see if do we get that amount. And yes, we get that amount. It is the same. Therefore, that is how you would have reconciled your profits.